In 2026, strategy matters more than timing. If you're waiting for more cuts from the Bank of Canada in 2026 to make your move, you might not get what you wish for. Rates are steady and most forecasts points to a longer pause, maybe even hikes, not big cuts to Canada's policy rates. And that's not bad news. After settling its policy rate at 2.25%, bond markets and rate experts predict the Bank of Canada will keep its rate unchanged through most of 2026. For you, this means less volatility, fewer surprises, and more room to plan and negotiate on your own term rather than reacting to market volatility. At the same time, the housing market is rebalancing after decades of exponential growth. There's no boom or bust. Price pressures are becoming more balanced. Home sales are expected to pick up gradually, prices are forecast to remain relatively flat with some regional differences, and competition is calmer than we've seen in years. That kind of environment changes the game. Buyers have more negotiating power and more flexibility with the opportunity to choose a mortgage that works today, not one that depends on future rate cuts. And if you want help turning today's stability into a clear mortgage plan, let's talk. Link in bio for more info.